You think your money sits safely inside your bank account, waiting for you to spend it however you choose. That is the illusion they want you to believe, while governments, central banks, and global institutions build a new financial system beneath your feet. As you tap your card at a grocery store, buy something online, or transfer money to a friend, a silent transformation is happening. The money you know is being replaced by a programmable, trackable, controllable digital currency that gives authorities unprecedented power over your life. They call it a central bank digital currency, but behind the polished name is a system designed to monitor every purchase, restrict every transaction, and shape your behavior without you ever realizing it. The world is being pushed into a financial trap disguised as modernization. Across major cities, inside government buildings with reflective glass walls, policymakers review documents showing how digital wallets could replace cash, debit cards, and even traditional bank accounts. Screens display animations of smartphone wallets, facial recognition systems, digital IDs, and centralized databases. In boardrooms, representatives from banks, payment companies, and technology firms discuss how money can be programmed to expire, restricted by region, limited to certain purchases, or frozen instantly with a single command. What sounds like a technological upgrade is actually a blueprint for financial control. The shift begins with the promise of convenience. Imagine opening your phone and seeing a government-issued wallet with your balance displayed in bright digital numbers. No more bank fees, no transaction delays, no physical cards. Just instant payments, instant transfers, instant confirmation. That is the sales pitch. Behind the interface, however, every transaction you make is recorded, analyzed, categorized, and stored in a central system. Your morning coffee, your fuel purchase, your grocery receipt, your online subscription, your donation, your travel choices, your habits, your interests, your vices, your patterns, all tracked in real time. In financial centers across the world, officials watch dashboards displaying transaction flows moving like digital rivers across maps. Every dollar becomes a line of code moving through servers instead of passing through your hands. Cash disappears from ATMs. Small businesses post signs saying "No cash accepted." People grow used to tapping their phones instead of holding physical currency. With each passing month, the distance between humanity and physical money widens. Slowly, quietly, the financial system becomes fully digital, and once it does, control becomes effortless. But programmability is where the real danger begins. With CBDCs, central authorities can decide how your money is used. They can limit purchases to certain categories, block spending in specific locations, freeze funds linked to protest activity, or cap how much you can withdraw. A digital wallet can track carbon emissions by scanning what you buy. It can prevent you from buying certain foods if you exceed a government-set health guideline. It can stop you from traveling if your social score drops below a threshold. It can flag you for investigation if your spending pattern looks suspicious. You become a data profile instead of a person, and your financial freedom becomes conditional. In back offices of payment networks and tech companies, teams analyze behavioral data derived from millions of transactions. They study patterns of consumer spending, predict future habits, and categorize the population into risk profiles. With CBDCs, these capabilities expand dramatically because the central bank sits at the top of the data pyramid. They no longer observe the banking system. They become the banking system. Your financial life is visible at the highest levels of power. Meanwhile, private banks prepare for their new role. Instead of being independent institutions competing for deposits, they transform into service providers operating above a government-controlled currency grid. Executives meet in tall office towers overlooking city skylines, discussing how to profit from the new system through surveillance-based credit models, subscription-based financial tools, and AI-driven risk scoring. They no longer rely on deposits. They rely on data. The customer is no longer a client. The customer becomes a behavioral asset. Then comes the moment the public does not expect. A crisis hits. It could be inflation, a market crash, a cyber attack, or a debt default. Governments announce that the old financial system is outdated and unstable. They present CBDCs as the safe alternative. Transition becomes mandatory. Digital wallets become required for benefits, taxes, wages, and public services. People line up at government centers to activate their new accounts. Physical cash is slowly withdrawn. Banknotes become collectibles. Coins disappear from circulation. Only the new system remains. But the hidden twist is that the system does not merely track money. It merges money with identity. Your digital wallet contains your ID, your health records, your driver's license, your travel history, your employment status, and your social rating. One account connects access to your entire life. If your score drops, your privileges drop. If you voice dissent, your transactions may be delayed, limited, or monitored. If you attend a gathering deemed unsafe, your wallet might flag you for review. If you buy something classified as restricted, your account could be temporarily locked for your safety. The infrastructure for total behavioral control is built directly into the financial system. And then comes the deeper twist, the one almost nobody sees. This system is not driven only by governments. The real push comes from global banks, payment networks, asset managers, and technology giants who see CBDCs as a path to complete financial automation. In private meetings, corporate leaders review profit models, showing how transaction fees, consumer data, behavioral scoring, and AI-driven financial products can be monetized at unprecedented levels. They see a future where every citizen's financial life is a predictable, programmable stream of revenue. The government gets the control. The corporations get the profit. The citizen gets compliance. In this world, freedom is not taken away by force. It is taken away through convenience. People become dependent on digital wallets that work seamlessly until one day they do not. A payment fails. A card declines. A transfer is blocked. A balance is adjusted. A limit is imposed. You contact support and receive an automated message explaining that your activity does not meet system guidelines. In the background, an algorithm has determined what you are allowed to do. But despite the force of this transformation, there are ways to protect yourself. You can diversify your financial life before the shift becomes mandatory. You can keep a portion of your savings in physical forms that cannot be frozen or programmed. You can support local businesses that accept alternative payments. You can reduce dependence on digital platforms that track every click. You can learn how privacy-focused financial tools work. You can move part of your economic activity outside the centralized system so that no single authority has total control over your life. You can preserve cash while it still circulates. You can build emergency reserves in forms that do not require digital approval. You can pay attention to policy announcements, legislative changes, and financial technology rollouts happening around you. You can stay informed about how data is collected, stored, and shared. You can prepare before the trap closes. Because once a programmable currency becomes the default, reversing it becomes almost impossible. The digital wallet trap is not a distant threat. It is unfolding inside central banks, technology firms, governments, and global financial institutions right now. It is happening in quiet policy meetings, software updates, pilot programs, and infrastructure upgrades. It is marketed as progress, innovation, and efficiency. But behind the marketing is a system designed to reshape society, redefine freedom, and rewire the relationship between citizens and authority. Your money is becoming a tool of control. Your transactions are becoming data points. Your behavior is becoming a profile, and your financial future is being rewritten. Now that you understand what is happening, your awareness must become action. The system can trap you only if you enter it without preparation. Knowledge is your first shield. Diversification is your second. Independence is your third. Who controls the money controls the people. And the shift has already begun.